Good morning, Betty. Goldman Sachs shares are trading higher in the pre-market following its earnings report, but not enough to recoup yesterday's decline. Let's give you the numbers here. Goldman Sachs beating on the top and bottom line. Sales of $10.09 billion, beating the consensus of $9.65. First quarter earnings per share, $4.29, 2 cents higher than the most bullish analyst estimate. And this comes after 17 analysts had raised their estimates for Goldman Sachs. What was it driven by? Capital markets, that is trading in equities and foreign fixed income currencies and commodities, along with investment banking and its investment and lending unit, which includes gains on its own investments. But as with JP Morgan and Citigroup, cost cutting was very much a theme for the quarter over at Goldman Sachs. Compensation as a percentage of revenue overall dropped 1 percentage point from was 1 percentage point lower than what analysts were looking for. It came in at 43%. And overall compensation that was set aside to pay its staff was $4.34 billion. 1% lower than the same time last year. In fact, Lloyd Blankfein in the statement says we continue to be very focused on controlling our costs and efficiently managing our capital. Quite a big change from the glory days. Speaking of the glory days, return on equity in the quarter was 12.4%. That's compared to as high as 32% in 2007. As you recall, the Federal Reserve passed Goldman Sachs or approved Goldman Sachs' capital raising plan. And so as a result, Goldman announced that it is going to be buying back 75 million shares.